to Simply BSI or Simply Budget, Save, and Invest. Back again with another video. As always, going to do a portfolio update as well as go over the option contracts that expired that account for the $726 of option income premium I received for week ending April 10th, 2026, this past Friday. Starting off in the rollover account or the traditional IRA, we see, again, pretty repetitive, the same positions for the most part. We have the SLV shares. Sort of luckily, I had a covered call expire worthless at the $69 strike. SLV actually closed at $69.11, but after hours dropped below $69. I believe SLV is one of the few tickers that where the options actually expire at like 4:15, as opposed to 4 o'clock Eastern. 4:15 Eastern is when they actually expire. So between 4 o'clock and 4:15 Eastern, SLV actually fell below $69. So I got to keep my shares, and that option contract expired worthless. You can see it's no longer in my account here. I have the HUD covered calls that expire at the end of this year, both of which I should be receiving around $900 of option income premium. I'll add that. I'm going to wait to obviously add that to my option income tracker until that week, until the week of December 18th, and I'll count that as the income for that week. But again, that is money that I already have in my account and that I'm able to use for buying power. I can go into that in more detail, but essentially when you sell an option, you get the premium right away and you're able to use that money to allocate toward other positions. You can see here I also have Robinhood 200 shares at the $115 strike. The CEPT, again, I talked about that briefly last week. I'm actually going to close that position. I think I just am overweighted in cryptocurrency. And actually, I did just get assigned on 300 shares of ETHA at the $16 strike, of which I had about a $14.50 cost basis on those 300 shares. So made a good amount of money there. But I'm just trying to close out of all these crypto-related tokenization positions. I'm just overweighted, and I regret doing that going into this year. But again, you can see I have HUD, obviously. CEPT is going to be, it's the SPAC for Securitized Tokenization Company. And then BMNR basically tracks the price of Ethereum. It's similar to the strategy or MicroStrategy, where they just buy, it's like an Ethereum reserve. So a lot of crypto tokenization exposure here. And then BFGFF was just something, kind of a gamble, honestly. It's a copper miner. Based out of the U.S. That one I'm going to try to sell as soon as I get above my cost basis, but I don't mind holding it. My original cost was like $300, so it's something I don't really think about too much, but those are my positions there. And in my Robinhood account, we can see I actually, every once in a while, I do try to play options in the sense of buying options, and I did buy a Meta put. That was sort of a play on the ceasefire terms essentially being broken with Israel still bombing Lebanon, and it seemed like there was still strikes from Iran's perspective as well, but the market reacted very positively to the ceasefire, so I thought that news would cause the market to react very negatively, given that the ceasefire was broken, but it didn't, but I did buy 2 Meta puts with the expectation that Meta would pull back a lot from that. You can see I'm down 30% in that position. I think I have an average cost basis of $5. So I'm going to hold that. My plan was actually to sell a Meta cash secured put at the $575 strike, but I do not have enough buying power. And you can see here my buying power is 111,000, but that's mostly margin. Actual cash is probably around like 24,000 of my own cash. So I don't have enough margin available to open up a Meta cash secured put, and that would just essentially be a hedge against this put position. So again, if I were to sell a Meta cash secured put, that'd be creating the obligation to purchase 100 shares of Meta at $575 come expiration on 4/24. And if that were to happen, that means that these puts would increase in value as Meta comes down to that $575 strike. So again, I'm just hedging myself. But what I actually might end up doing is selling at a strike a bit lower than the 575. But I really want to do it actually a bit higher, but we'll see when that comes around. You can also see here I do have an Amazon covered call that I sold a few weeks ago at the $240 strike. This is when Amazon was trading at like $205. So I thought, you know what, the next few weeks, few months, we're probably just going to be trading sideways. Not much is going to happen. I was absolutely wrong. Amazon shot up to about 238, I think we're at right now, maybe a little lower, 233, and that I am likely going to get assigned on this contract. My hope is that because it ran up so early that it might just pull back, trickle down by the time June comes around. But we have earnings between now and then, and honestly, I wouldn't be upset about getting assigned on that position. I really want to get into all cash and just sell cash secured puts. It makes my life a lot easier and tracking income a lot easier and my portfolio a lot less volatile when it's just 100% cash. So I wouldn't be upset about getting assigned to those shares, and I'll just honestly start probably selling cash secured puts at the 240 strike or the like 235 or something a little bit lower. Right now my cost basis in Amazon's 238, so that's why I sold the 240 call. But I can get them probably a lot cheaper sometime later in the year. I just feel like there's still a lot of uncertainty, and I just don't foresee the market continuing to go up this way. But we'll see. Who knows? You can see here I also have an ETHA covered call, Robinhood covered call, IBIT, two IBIT covered calls, and a SoundHound covered call. Those all expire the same date, and those are all positions I'm holding. So again, my thinking when I sold these positions is that the market's probably going to just trickle down or move sideways for a bit, so I might as well capture some income on those. So once all of those expire, I'll include those again on that week's income tracker. So essentially the week of June 18th is when I'll actually calculate those into my option income earnings. But again, that is income that's already in my account, so I can use that as collateral or buying power for other positions. And as always, you can see I am still holding that Robinhood $120 call as well as the Sound $10 call. Again, those are just bets on my positions reaching back to their cost basis by the end of next year, or rather by the end of this year. Again, as I'm going to hold those positions anyways, I might as well try to capture some other income in other avenues. It's not necessarily a hedge, it's a bet that, again, it is a bullish position, but again, I'm holding those shares anyways, so I figured it's worth the risk of a couple $100 to capture that gain as well. But here, let's go into the actual option positions that expired, worthless this week. So again, I was playing USO. This was similar to the Meta put play. Again, the part of the conditions for the ceasefire, I believe, were reopening the Strait. The Strait of Hormuz has not reopened from what I've been reading in the news. So the USO plays is a bet that oil prices were not going to come down, which this did actually expire worthless. So we see here I captured $117.96 of option income premium on there, and as well as Tesla. I do like Tesla long term. I am waiting for a better price. I would like it sub like 320. 307 is what looks like the next real line of support, but I did sell like Tesla 325 cash secured put, and I received $96 for that. And I'm going to probably keep playing Tesla. Tesla, you can sell way out of the money options and still get a pretty decent premium. So my goal right now is around $150 a week. So I'm going to try to just stay consistent with that and not get too greedy or too aggressive. And I can get $150 a week easily if I'm selling Tesla puts. And the likelihood of me getting a sign on those is going to be super slim because I've been doing it really out of the money, far out of the money. We also have an SLV cash secured put that expired worthless, $115. Rather $113 I received. I have 100 shares of SLV in my traditional account still at the $69 strike. So any of these red days in SLV, it's just a hedge against my purchases in my traditional account. And I'm like, you know what, I might as well just continue to sell puts so long as we're under the $69 price, because I'm gonna be holding those shares in my traditional account anyways. So I can be collecting option income premium in my brokerage account while I'm waiting for SLV to return to the cost basis of my traditional account, essentially is my line of thinking. So in this case, I sold a SLV put, received $113 for that, and I also sold a Tesla put. There's no rhyme or reason between. I try to do the individual, like these are positions from the same account. The margin tab and the individual tab. The individual tab is just going to be my actual cash, or it's supposed to be. And the margin is supposed to be the any positions I use margin for, but it hasn't really worked out that way, honestly. I'm probably going to just consolidate these two sheets into one, but I don't know. I don't know. I got to figure out a clean way to do it. I probably just for the rest of the year will just only use the individual tab, just to keep it a lot easier for me to keep track. But again, this is in the same account. But I also sold a Tesla. This one actually expired on the 8th, and this one expired on the 10th. So this one, after it expired, I sold the one that expired on the 10th, but I received $129 for this, holding it for 3 days. So I sold it on a Monday for a Wednesday expiration and received $130, and that's a pretty good return for holding this. You can see it's a 20% annualized return, but that one expired worthless, obviously. And going into the traditional account, the positions I mentioned already, SLV, that covered call expired worthless, so I'm still holding those shares, but I received $101 for that. The ETHA actually got assigned on, so I had to sell all my shares. Those I had a cost basis of around $14.50. So in addition to receiving $166.44 from these option contracts, I also received $150 per 100 shares. So that's going to be about like a $600 gain. And I can see if I can show you that in the account. But I made about $600 on that position, holding those shares of ETHA. So we can see the ETHA here. This is the 322. Let's do. I don't know why I did that date range. Let's do here. So we just capture this week, but we can see we made $658.91 total on these, and that's just the option assignment, as well as again the premium I received. So good position there. I also bought a few shares of IGB. That's just like a software ETF, but I second guessed myself and just thought it wasn't a smart play. But yeah, we're gonna keep playing. Gonna keep selling puts. Honestly this year I don't foresee myself making too much, just because I am pretty down in a lot of these crypto-related positions: Robinhood, ETHA, IBIT. So the rest of this year really am just focusing on contributions. So I've been trying to contribute at least like $300 a week to my individual account. I want to start contributing again to my Roth account, which I haven't in a while. But again, the strategy is kind of shifting a little bit, but not really. I just want to try to keep generating income with the cash I have in my individual brokerage account. Plus, I am receiving still the 3.1% APR as well in the cash, even if it's being used as collateral. So we see like the cash earning interest in Robinhood. It does also include options income collateral. So all the money I'm using or that's being used for collateral for these cash secured puts is also simultaneously earning interest from Robinhood. So it's kind of like double dipping on my money there. So I want to be able to just generate as much as I can, well, while I can. But as always, guys, thank you for tuning in. This is not financial advice. All the things, comment, like, subscribe, and we'll see you next week.